if we were to go back on a gold standard like the old Treasury notes before the Federal Reserve, where every dollar in circulation that the Treasury would issue that promised to pay gold had gold to back it up, fully backed, not a reserve ratio, then gold has to go up 25,186.9%. So, at which gives you a gold price of $10,633 per ounce if we were to back all of the paper Federal Reserve notes that are in circulation.
The gold market continues to experience upward pressure, with the ongoing uptrend serving as a key indicator for traders. Market focus remains on tariffs and concerns over a potential global economic slowdown, contributing to the rising demand for gold as a safe haven asset. Speculation has emerged regarding the U.S. government's accumulation of gold in anticipation of a potential revaluation. Financial commentator Mike Maloney suggests this may be a factor behind the recent surge in gold prices. Treasury Secretary Scott Betet has indicated that within the next year, the government intends to monetize the asset side of the U.S. balance sheet, which includes gold. Adding to the debate, a groundbreaking investigation by the Department of Government Efficiency, DOGE, has intensified discussions across financial sectors. The inquiry gained momentum after Elon Musk raised concerns about the verification process for Fort Knox's reported $425 billion gold stockpile. As part of this initiative, the DOGE has launched a comprehensive review to confirm whether the facility holds its reported 4,580 tons of gold, marking a significant shift in Treasury oversight. Maloney highlights the implications of a potential return to a gold-backed monetary system. He notes that a substantial revaluation would be required for the U.S. dollar to be fully backed by gold. Under such a system, gold prices would need to rise by approximately 2,186%, reaching an estimated $10,633 per ounce. Meanwhile, Bank of America remains bullish on gold, projecting that prices could exceed $3,500 per ounce. Leading global banks and institutional investors anticipate that the precious metal could surpass the $3,000 mark by 2025. Gold has already recorded a remarkable 28% surge in 2024 and continues its upward momentum into 2025. With year-to-date gains exceeding 10%, gold remains one of the most sought-after assets in the commodity markets, reinforcing its status as a reliable store of value amid economic uncertainty. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop.
Why would the government want to accumulate gold? If they're going to be audited, all the gold has to be there. So that's Glenn Beck's speculation. But it'll be if they're talking about revaluing the gold. That is what a lot of people are thinking, that this upward spike in gold prices is from. Treasury Secretary Scott Betet said within the next 12 months we're going to monetize the asset side of the U.S. balance sheet, and that includes gold. And Glenn Beck said that the statutory price was $45 an ounce, which is wrong. This says it's $42 an ounce, which is wrong. But if it's actually $42.22.22. So it's $42.2222. Anyway, if it's revalued, it could inject about $800 billion into the Treasury general account. But since the government spends over $7 trillion each year, that would be less than 2 months worth of spending. So they really wouldn't do that. What's more important than auditing Fort Knox is auditing the Federal Reserve. Elon Musk considering to have Ron Paul head up an audit of the Federal Reserve. This would be great. So let Ron Paul have at it and audit all of the places that gold is stored, not just Fort Knox. So this is the Federal Reserve's summary of U.S. reserve assets. So this is the entire U.S. reserve asset. Gold stock, $11.041 billion. At even this is incorrect. 42.22 per troy ounce. You'll see this in a moment. I'll point this out in just a moment. So $11.041 billion. Then you go to the Federal Reserve report on gold and gold certificates. Total gold and gold certificates reserve is $11.037 billion, not $41 million. So that's actually the gold certificate accounts. So this chart is wrong. And I will show you here in the Federal Reserve's H.4.1 release. You've got to go down to gold stock. So this is factors affecting reserve balances of depository institutions and condition statement of the Federal Reserve banks. And so gold stock, $11.041 billion. But if you jump down to the bottom of this report, you have collateral held against Federal Reserve notes. Now, most people will say the U.S. dollar is not backed by gold, and they couldn't be more wrong. It is backed by gold. Here are the gold. It's the gold certificate account. This is $11.037 billion. So if you take just that chart that I showed you, that was just the gold certificates. Now, since this backs this, the $2.790 billion worth of Federal Reserve notes outstanding. So this is the currency, the Federal Reserve notes outstanding. This is their current valuation of gold on their books. And if you take one and divide it into the other, you'll find that the amount of gold backing for each dollar is 0.39546 cents per ounce. So about 0.4 of a penny at the current valuation of $42.2222.
As gold prices reach record highs, the market is experiencing significant supply constraints, leading to ripple effects across the precious metals sector. Financial commentator Mike Maloney notes that a shortage of gold bars has prompted investors to turn to silver as an alternative. This surge in demand has put pressure on silver supplies, forcing some major banks to halt silver bar sales. The Korea Minting Corporation recently suspended the sale of gold bar products to banks on February 12, further exacerbating the supply-demand imbalance in the market. This decision has led to an increased demand for silver bars, creating shortages that have effectively halted bank sales of both silver and gold bars. On February 14th, the Korea Gold Exchange notified major banks including KB Kookmin, Shinhan, Woori, and NH Nonghyup, highlighting difficulties securing silver bar supplies. While Hana Bank was not initially involved in silver bar sales, other banks quickly responded to the shortages. A commercial bank official confirmed receipt of the notification, stating, "It is true that we received the document, but we are still negotiating the timing of the sales suspension." Another banking representative added, "We are delivering only the orders received until yesterday and have suspended both silver and gold bar sales starting today." The current market disruption results from a balloon effect, where restrictions on gold bar sales have driven investors towards silver as an alternative safe haven asset. Let's get back to the interview.
This is the most important part. The gold reserve held by the Department of the Treasury is partially, remember this, partially offset by a liability for gold certificates issued to the Federal Reserve. Okay, let's take a look at that partially. You remember that we've got the gold certificate account at $11.037 billion, and $11.041 billion was the total gold. So that partially that they're talking about here is that 99.9637 is the partial amount of the gold. So 99.9637% of all of the U.S. gold has been pledged to the Federal Reserve, so is offset by a liability for gold certificates issued to the Federal Reserve banks at the statutory rate, which Treasury may redeem at any time. So the Treasury can go ahead and say to the Federal Reserve, okay, give us the IOUs, these notes for gold that we've issued, and we will give you the gold at $42.2222 per ounce. We'll give you 99.9637% of all of America's gold at that price. That's what the IOUs, the gold notes, say. So this is the currency in circulation. Raise your hand if you think they're going to stop printing. Really, you have to take a look at that and this. Are they going to stop printing currency faster than we mine gold? Raise your hand if you think, forget it, don't raise your hand. So, as gold prices recently hit record highs, a shortage of gold bars emerged. Consequently, investors turned to silver bars as an alternative, leading to a surge in demand for silver bars, an official at one of the major banks said. And banks halt sales of silver bars amid soaring demand. So demand for silver is finally going up. Ronan Manley, excellent analyst and commentator and blog writer, Bank of England, pulling out all stops to tell the plebs that there's nothing to fear about delays in the gold withdrawals from the old lady. Now, the old lady, that refers to the nickname for the Bank of England used to be the Old Lady of Threadneedle Street. This vaudeville show has too many acts and is getting tiresome. For many, many years, there was a lot of gold dealers around the world. They would go off of the LBMA fix.
The debate over monetary policy and asset-backed currencies is gaining traction as the gold market faces unprecedented demand and potential supply constraints. Whether gold revaluation becomes a reality or remains speculative, the metal's role as a financial anchor is undeniable, with institutional investors and governments closely monitoring gold's trajectory. How do you see these developments shaping the future of global finance? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.